If it's not the coronavirus that ends up killing us all, it's going to be the economic apocalypse that is sure to follow. Then, then it might be a big old tax bill that you have to pay at April 15th, unless the feds actually push back April 15th, or the deadline towards it, and eliminate income taxes altogether for all of 2020. No, I don't know. But yeah, it was supposedly Bush, oh my God. Supposedly Trump already talked to Republican leaders of the Senate, and they were saying that, he pitched the idea of 0% income taxes for all of 2020, and even pushing the deadline of taxes back. This is all kind of just ideas that are being thrown out there as far as the economic stimulus package is concerned due to the coronavirus or COVID-19. So we'll see what happens. I don't know, but your guys are just in luck. If you own a house, there are some tax things that you could do to save you a ton of money, because the tax man has it cometh. What's up, real estate rock stars? I'm Mighty Mike, and tax season is in full swing. And if you want to keep your kneecaps intact, then you better pay up, because that tax man is coming for you. But you might be asking, is there a way that you could use your home to lessen your tax burden? Well, if you do own a home, I have some really good news for you. There are several tax breaks that you can claim that can help you to lower your tax bill this year. Now, keep in mind that these tax breaks may mean that you no longer take the standard deduction, and instead you're going to have to itemize your taxes, which could be kind of a pain in the butt. Disclaimer, I am not an accountant or a CPA. I'm just a nerd with a camera and a YouTube account. These are just some ideas and tips to take in consideration. So if you need to talk to a tax professional, go ahead and do so, please.
Talk to a financial professional. Don't believe people on YouTube all the time.
Yeah, don't blame me if you screw your taxes up. Now that the tax claimer is out of the way and all the lawyers have been kept at bay, let's get into it. One of the biggest tax deductions for homeowners is mortgage interest deduction. Now, what does that even mean? Well, your monthly mortgage payment goes towards your principal, your taxes, and your interest that you pay on your home loan. And you can deduct that interest that you pay during the year up to a certain limit that will help you reduce your taxable income. Now, with all good things, keep in mind that there are certain limits. You can only deduct the interest up to $750,000 of a mortgage debt, or $375,000 if you are married filing separately. And you also may be able to deduct the interest that you paid on a home equity loan or a line of credit, as long as those funds that you get from that line of credit or loan are used for home improvements for your current homesteaded property. And if you use those funds for any other purpose, such as paying for college tuition or paying down debt, that interest is no longer deductible. If you happen to buy discount points when you're purchasing your house, you may be able to deduct those as well, depending on how much you already deducted from your mortgage interest. The second major tax break that homeowners get is the deduction on their property taxes. Essentially, the government will reimburse you for money that you paid towards the government, just at different levels. You got local, federal. You can actually deduct up to $10,000 of your property taxes, along with state and local income taxes, on your returns. For your first-time homebuyers out there, if you didn't put down 20% towards your home purchase, you're probably paying what is called mortgage insurance premiums. This is deductible as well, so keep that in mind. Now, for you current homeowners out there, if you made some energy efficient upgrades to your house, you may qualify for a credit up to $500 for those improvements. If you're looking to deduct medical expenses, one of the things that you can include is the installation of healthcare equipment or other medical necessary home improvements that you made last year.
For example?
Typically, you could deduct medical expenses if the total cost exceeds 7.5% of your adjusted gross income. So for the examples, healthcare improvements may include installing entrance ramps, for anybody who may be wheelchair bound, making doorways wider, installing railings or bars in your home, especially in the bathroom, if you have trouble getting up, you're elderly, or even like those little ramps that go, those may be included as medical expenses when it comes to home improvement. So if you work from home as a self-employed person or a contractor, you may be able to deduct certain home office expenses such as utilities and the actual space on your returns. Now, what may be interesting is that with the COVID virus going around, you're probably gonna have a lot of people who are gonna be working from home now. There's a lot of companies that will be like, stay there, don't come here. So you may see some Congress shifting the tax code around to be like, well, we're actually gonna start including these people as well. So you may be getting another tax deduction if you guys work from office. They'll
Think about it. This is motivating people to work from home more often then.
Oh, I'm down for it. I love it. Nothing beats working from home like working in your underwear. Another tax break that doesn't really show up on your tax returns, but still is very, very important for first-time home buyers. First-time home buyers may be able to withdraw up to $10,000 from the IRA individual retirement accounts penalty-free, as long as those funds are used towards a down payment on the purchase of their home. Now, typically in most situations, when you're trying to withdraw money from your IRA, they're gonna charge you a 10% penalty fee. This is waived. Now, if you end up selling your home, and in many cases, you can collect those profits tax-free. You just had to live in your home for at least 2 years of the last previous 5 years before you sold the home. The limit is up to $500,000 for married couples and $250,000 for single taxpayers. Another unfortunate tax break is for people who have had lost their homes to foreclosures or short sale. Now, typically, if a lender forgives any of your mortgage debt, that amount is taxable income, but Congress changed those rules back in 2019. So if you lost your home to foreclosure and had to sell it for less than what your home is worth, then the amount that the lender forgave is no longer taxable. Ain't that some messed up stuff? You're like, I'm losing my house. And Congress is like, did you sell it? Like, yeah, I had to get underneath there. Where's our money? If you're a new homeowner, definitely check into different tax deduction credits and other tax breaks that are available to you. This may mean doing your taxes this year is gonna be a lot different than previous years. That typically means you're probably gonna hire some professionals to do so. Definitely check your local area. Find people who are familiar with your local laws and your local tax code, as well as the federal tax code. Those are probably gonna be your best options. So if you guys have any general questions about buying or selling a house or even investing in Florida, all you have to do is go ahead and shoot me a message. I love answering you guys' questions. There's also a bunch of information where you can follow me as far as social media in the description down below. If you're on Instagram, go ahead and just hit the link in the bio and I'll have all my links that you can click on, so you guys can learn how to get the process started. So what do you guys think about these tax advantages? Do you know any legal ways? And I have to stress that. I don't want no crazy illegal ways popping up in my comment section. But if you guys know any legal ways to reduce your taxes via home ownership, or you have some other great ideas, go ahead and leave them in the comments down below. And just want to say I appreciate you guys watching, and I'll see you guys in the next video. Hey guys, thanks for watching, and I hope you enjoyed that video. If you did, go ahead and hit that like button and subscribe to the channel so you guys can stay up to date with more information. And if you want to check out our other videos, go ahead and just click on the links right here, and I'll see you guys in the next video.